Fiscal and monetary policies. In the previous lesson, we analyzed some aspects related to the traditional economy and its evolution, how money works, and how the cryptocurrency sector is gaining a foothold in the traditional markets. In today's class, we'll continue analyzing how the economy works, as we discuss how the traditional financial system works and the possibilities offered by cryptocurrencies. Many of you may ask, what is fiscal policy? Fiscal policy is an economic mechanism by which the governments of a country are able to control aspects such as income or expenditure, with the aim of stabilizing the economy. By taking such measures, governments are able to influence key aspects such as employment or production. Fiscal policy aims to increase the country's capacity for growth by spending on research, education, and infrastructure investment. Example, increasing resources to improve society's quality of life. Can you imagine what life would be like if we had no roads? What do you think would happen if we had to pay 30 euros for lettuce? It'd be very expensive, wouldn't it? That's why governments try to reduce such high expenses by increasing, for example, the taxes we pay. But do you know what taxes really are? A tax is basically a payment we have to make to the government so that the government, in return, can provide us with things like free education or roads to drive on. For example, when we get up in the morning and turn on the light, we are paying taxes. When we go for a coffee or take the bus, we are paying taxes. Taxes accompany us during our day-to-day life. Countries like Spain have taxes between 20 and 25%. On the other hand, the United Arab Emirates has zero taxes. Once we've understood what fiscal policies are, let's move on to monetary policies. What is a monetary policy? A monetary policy is a series of measures taken by governments and banks that try to keep prices and the economy stable. They do this by controlling the money supply, printing limitless money, causing inflation. So what solution is there to this problem? This is where cryptocurrencies appear. With the aim of limiting the printing of money, ecosystems such as Waves aims to solve the problems of the traditional financial system. Let's look at an example. We have seen how central banks make money decrease in value by printing cash all the time. On the other hand, Waves offers a limited supply. Thus, unlike traditional money, the value of your cryptocurrency will rise over time. As we can see, monetary and fiscal policies are what move a country's economy, and we could spend hours delving into them. However, with this basic knowledge of how they work and the importance of cryptocurrencies, you already know more than the vast majority of the population. I hope you like this class, and I'll see you in the next one.